Welcome to belkhayate.com. Today we're talking about crude oil at CL on the NYMEX. We're using the professional technical tools developed by Mustafa Belkhayate, the Rivière de Belkhayate, or the Belkhayate River. The chart that you're looking at right now is the daily bars of the oil, and let's move to applying the indicator. The Belkhayate, the Rivière de Belkhayate is actually a tool that slices and dices bars to show horizontal, vertical, and diagonal support and resistance marks. If you notice by the blue line at the top side, we're calling this an outside envelope line. It dynamically is created and follows the outside points of the movement. On the inside is the lower envelope, which creates a channel between the two, and you'll see that it's following most of the major points. On the inside, the solid red and the solid blue trend lines reflect when a trade was made, and of course the red is designating a short and the blue would be designating a long. If we notice where we are at this moment on the far end, we're actually in a short where this price has been violated. It looks like it could convert to a long. It hasn't at this point. We would be out of the trade. It's still inside the actual outside envelopes. This is a 200-day moving average. If you'll notice, this is pretty much flat for an extended period, going back to at least October 2012. Let's get to the next screen and we'll define some of the key technical aspects that we notice. We'll try to break down all that's happening on the screen to make it a little bit easier to understand. Again, let's go back over the envelopes. The top side envelope was reached on August 28th, 2013, as designated by this blue line going down. As you can see, the trend is still in effect and is touched on several key points. Even though this isn't touched here, it's still following along the same path. On the lower side, the line was created on the 27th of November, going to the downside. It's actually touched one point at this mark right here. Since we're down here right now, we note that the low on November 27th has been surpassed by another lower low happening earlier this month. On the top side, we actually have a lower high. The high that started the outside envelope is now, a new high was made approximately around the beginning of the year. If we note the two outside envelopes, this red line and the blue line form a wedge. If we're noticing, this is a lower wedge and price is falling within that lower wedge at this time. To help break down what the tool, the Belkhayate River, does, one of the key aspects is a support resistance thing we call hip lop aging. A hip lop is basically a high point or a hip, a low point being a lop. So horizontal lines on the top side would be hips, and the ones on the lower side would be lops. If you notice that we have aging on these bars, the most recent one is only 24 bars old, where the next one on the low side is 27 bars. So as we look to the outside here, you'll see this is 200 and 108, which will show that the aging of this particular high points and low points are not as old as compared to other daily charts that you might have watched. On some typical gold charts, you might find 1,000 bars as being an average, as price has been trending a lot more. Noticing these smaller numbers at a quick glance would mean that oil has basically been consolidating more so. You'll notice a lot of these, the 28, the 53, they're really not that old. So oil is traveling within a channel. To help show that channel, we've actually inserted a weekly oil chart. This goes back to 2009, a little bit after October. If you notice, this is pretty flat in general. Some of these outside lines are realistic going back to 2009. This is a diagonal trade line. But most of the oil, as you can see, is traveling within a tight area. Very good for mean reversion, not as good for trend trading. So, where do we see oil traveling? At this point, we're going to start with the one we think it's least likely to go in, and that's towards the resistance side. Even though oil is rising at this point, it's inside a lower wedge and a short is in place. Historically, or at least looking back for what it should do, we believe that it will not go up to the level 1 resistance of 100 to 101. And that the moving average is pretty much flat at this point. This is the 101 area. The second mark that we have for a long would be at the 113 level. We find this to be highly unlikely anytime soon, although, of course, once it breaks past here, we'll come up with another analysis. On the lower side, we believe the support level will be the first one touched. As this did make a lower low, and this is a lower high, leads us with the idea that price will probably be traveling down to touch this lower channel first before it bounces back up. The first mark would be between these 2 points. This is 91.38, and this is 92.31, and this is 91.38 in here. The second likely level would be at 86.87. This is last touched on April 13th of 2013. It would still be considered range bound, as you notice how many times the price has touched these points, but still this seems to be the more likely place where oil will travel. And that concludes our analyzation of oil on February 5th, 2014. Please go back to belkhayate.com for more analyzations. Thank you.